Tuesday. So Tuesday morning, we started off high. We in the first hour we ended up running up and rejecting off that 745 level, right around 746. Went a little bit above it, right. Then came right back down, and we tested that support level. We went right past that support level, went all the way down to 722, but then shot right back up. That long wick right there. We've mentioned that long wick right there before.
That's in the middle of my fault. Go ahead.
It's in the middle of the day at 9:30, right? So they let you think the trend was down for the minute, and then black cow, right? So stop loss orders taken out right there, and then end up coming right back down today. But the reason why this is institutional grab and why we say institutional is because that long wick is the dead giveaway. When we talk about the market makers and we talk about the big players that could really move the market, we can't do it with the little 100,000, 200,000, right? With the little bit of money that we may have. And even if you do have a lot of money playing in the market, it's nothing compared to the 10 billion, 8 billion, $100 million moves, right? So, down here, only the big players could add that much money at that given time to move it right back up to the upside, right? And that's why we don't get afraid of these dips, man. We don't get afraid of these dips. As soon as the market ended up going down in the turmoil, you had Trump talking about something with the blockade or something with Iran, saying he's going to do some type of retaliation. And then you had Jensen Huang, the CEO of NVIDIA, talking about this is a great dip buy opportunity, and market shooting right up, right? But if you don't understand, you're not keeping up to date with Full Circle Wealth, man, you're going to think that it's the end of the world and you're going to sell your positions.
Shit.
But we not fearing over here. I'm not selling my positions, right? If you want to stay updated and stay up, just stay updated, man. Go ahead and join the Discord, man. Go ahead. We live in there every day. And I'm dropping the stock analysis and the SPY analysis every day. So then fast forward to today, man. So fast forward to today. I told you guys in the Discord yesterday, I'm looking, okay? We ended up breaking that level, but ended up coming right back into the range. So do we hold above it, right? Or do we break below it again? Today, we trickling down below this level, right? Retesting this level. If we end up retesting this level and staying up below it, market can end up trickling down, right? We got more levels down here. I'm still watching that 695, 700 level. We still have yet to get there, right? But at this point, we really don't know what's going to happen. I'm not even going to tell you what could happen. I'm just going to tell you what I'm prepared for.
Yeah.
Right? If we break this level, that institutional grab level, really, in my mind, we could have another leg down if that even happens, right? In the markets, in today's markets, you may think it's going bearish, and next thing you know, it's not no more, right? Vice versa, it may be going up to the upside, and it's not no more. So, really, if I zoom out on a 4-hour time frame, man, I'm seeing whether or not we stay below this level. If we stay above this level, man, we made a new support, right? And I'm seeing whether or not we test that 745. And when we test that 745, are we rejecting it again? Are we staying up to the upside? Because if not, then we stay in another range, right? And we're going to stay in that range till it breaks out and see what happens, man. But hey, that's the SPY. I got some other things to break down real quick besides the chart, but you can go ahead if you got something to say, brother.
Yeah, let me see.
Give us your thoughts, man.
Let me see. I was looking at the SPY chart yesterday too, and so from all-time highs, this institutional grab is exactly 5%, right on the money.
Man, right on the money. That's right on the money. Crazy. 5%.
And so I'm like, okay, on my trading view, I had marked out just 5, 10, and 15%. And so going right down to here, just a little bit lower.
That's 8%.
All right, hold on. Bring it down. Bring it around here is what I got on mine. It's 10%. Can't get it right on the money, right? So I got, let me just do it like this. Well, we already got it, right? The white line, bang, it's another 10%. Let me touch it up. Make it pretty. And then I did 15% ultimately. That's what I was looking at for SPY as well, just to see how far where price will go from 5 to 10 to 15%. And shit, we ultimately had the same analysis, low key.
Yeah, man. You know, a 10% would be at 678 from where we are now, and a 15 would be at 633, man.
Right where we had that first bounce from that first rejection off that support level.
That's what started the run up.
Exactly.
Right there. They're right there at 615, or I mean at the 15% at 632 for real. Yeah. So hey, man, we prepared. You don't know what this market gonna do, but we prepared for when it does do what it do. See, even like right now, we retesting that. I want to see us test that institutional grab level again.
Yeah.
You know, let's see what happens there. But hey, something else to keep in mind too. I got the notes right here. Yesterday, so this morning we had the CPI numbers came out, right? So that's the consumer price index. So this is what the spending and costs look like for us as consumers, right? So inflation came in at 4.2% annually for the month of May, right? For May 2026, sorry, so not for the month of May, but for May 2025 to May 2026, we got 4.2% total for inflation. And it was the highest that it's ever been in 3 years, right? But here's the story behind the numbers. So energy is the main driver, right? Year over year, driven entirely by the Iran war disrupting the Middle Eastern oil supplies. Gasoline alone is up 40.5%, right? So energy is really that oil for the people who don't know. We use that oil for a lot of different energy, for a lot of stuff, right? And that's what they mean by the energy. So those oil companies, Chevron, ExxonMobil, they booming right now because they're benefiting from the Iran war. But what most people don't notice is the fact that CPI, right? So core CPI. So you have CPI and you got core CPI. The core CPI tracks the inflation of everything but food and energy, right? So without food and energy, inflation only rose 0.2% for the month, and it's actually below the 0.3 estimate. And that means that's kind of signaling that the underlying economy isn't as hot as the headline number suggests, right? So it's not as bad as it makes it seem like, even though, you know, oil and the gas prices, all that stuff that's a big deal. That's a big chunk of our lives, right? But other things that are involved in core CPI aren't going up as much. Things such as CPI, core CPI tracks the rent and the shelter. So your monthly housing costs, right? That's only risen 0.2% in the last month, and core CPI is up 2.9% year over year. So the total inflation, including food and energy, is up 4.2%. But without food and energy, things such as rent and shelter, medical care, clothing and apparel, new and used cars, education costs, haircuts, personal care services, hotel stays, entertainment, that's only up about 2.9%, right? So, that was something interesting as well that I learned. So what this is telling us that the everyday cost of living outside of gas and groceries is actually relatively stable. People aren't paying dramatically for rent, clothes, or healthcare for more of a month. But that don't mean gas ain't high, man. So what you got to say about this information, man?
Just off the simple fact that we, you know what I'm saying, the U.S. has petrodollar, and what everybody else around the world uses. That is, I can see why that would be the catalyst as to why, or energy and oil, but I can see why that would be the main catalyst as to why it is outrageous. You know what I'm saying? We got prices out here. We was coming from maybe $4.50 for the gallon. Right now we're at $6.3. You know what I'm saying? It's at downtown, at least. This is downtown prices.
Yeah, and even if you went down, to the outer skirts, to Federal Way, it's looking like that too.
Yeah, it's like 5.8, 5.9. So come on now, that right there, as well as. I wonder why this is it's kind of funny. Oil is not hard to come by. There's so much oil that we have as the U.S. because we bank our whole everything behind it. You know what I'm saying? Yeah. We have petrodollar, that's gas dollar. What I don't understand is why we're getting kind of taxed out the ass, and then we have reports like this that specify that well, yeah, the oil and the energy might be up, but your living's cool. You're straight.
Like, come on, man.
You can live perfectly fine, but to get to work, to make the money that we tax you on, that we also tax 2 or 3 times, you guys got to figure that out. You know what I'm saying?
Yeah.
And it shows you, like, I wouldn't go as far as to say capitalism, but this is capitalism, man. Like, it gets to the point where it's like, you know that you're getting hit over the head, and